Have you ever felt so sick about a stock price that gives you the actual nausea, yet everybody loves this stock?
It's a once-in-a-decade opportunity.
We're just gonna double down.
Is literally going to the moon.
Super bullish, super pumped up.
The hype around this company is insane. Like, literally, it makes me sick just thinking how much money people will lose when the valuation bomb will inevitably explode. Like, mamma mia, why? Why FOMO-ing at this insane price? Have you guessed already which company I'm talking about? Let's play a quick game. Which of these tech stocks is giving out the strongest AI bubble vibes? Tesla, Nvidia, Meta, Palantir or Alibaba? Which one is the most overvalued in your opinion? Drop a comment below if you want to officially guess to win a prize of absolutely nothing, but I need some engagement for the algorithm, so hopefully we can stop people from buying this crazy company that you have already guessed, right? Oh, I almost forgot, this is not financial advice, it's clearly just entertainment. Let's move on. I don't pretend my answer is the ultimate truth on valuation, but there are some objective data points that we can look at for a solid and fair guess. So let me show you how my value ratio evaluate based on numbers. I apply it to hundreds of companies every month and it's working quite well. Let's rank this company to see who might get burned. First of all, we start with the real cost, the investor price. Unlike market cap is the real cost of each company for investor like us. Nvidia is over 3 trillion, then Meta 1.8 trillion, Baba and Palantir around 250 billion only. If you want more details, please check out my investor price video. Next, I like to break down my valuation using the 4 main parameters: sales, margin, growth and risk. I call it SAMAGRISK. I like it because it sounds a little bit like a Pokemon name, right? These inputs are everything, valuation depends on them, so let's double check them together. You might disagree with my numbers. Sales, trailing 12 months from official filings, simple. Margins, straight from the financials for Meta, Nvidia and Alibaba. Tesla today is just 5%, but Elon believes margins will increase to 9% again. Same with Palantir, today are 16%, but management believe 30% is achievable soon. Growth is where the valuation fun begins. Everyone can dream up crazy growth, everything is cheap with 500% revenue growth, but let's be realistic. Here are my 5 years CAGR prediction based on analysts. I believe Palantir and Nvidia might slow down in the coming years, but 25% is still incredible growth. Tesla might accelerate with Optimus and Robotaxi. Risk is what it set my ratio apart from typical multiples, is a 1 to 100 score, considering factors like share dilution, margin pressure, geopolitical risk, depth, growth sustainability and more. Here are my scores. Are all quite low, but Meta is the safest at 11, is a more established and predictable company. Tesla, Nvidia and Palantir are a bit higher, in the 20s, because their future isn't so certain. Maybe Nvidia faces new competition and has to lower the 53% margins. Maybe Tesla Optimus doesn't work well enough. Alibaba is the riskiest, ironically performing best in many risk metrics, but located in China. Like it or not, that's real geopolitical risk. I like Chinese stocks, but as investor, we need a discount for this risk as well, so I gave it a bit higher score. Finally, let's review the results, but please drop a like. I spent years developing the value ratio and now I'm sharing it for free. The value ratio is a multiple similar to the price to earnings. The lower, the more undervalued. The median for 150 companies I track is around 26, which is considered the market fair price at the moment. I personally think the market is overpriced and the median might drop with a recession, but according to my model, right now, Meta, Nvidia and Baba are slightly below that median, so they're fairly priced, almost cheap versus the broader market. I like when companies with so different numbers end up with almost identical valuation. It's a proof that the system works. Tesla, on the other hand, is very overpriced. At 52, is double the market even considering margin expansion and 25% growth. Elon, no thanks. But the stock that makes me nauseous is Palantir. A 40% jump last week alone. It's above any fundamental logic. It's insanely overpriced. And please don't come and tell me stuff like,
there's always a premium to be paid with buying the best company of its kind.
Sure, Tom, it's true. We must expect a premium for the best company because the best companies have high growth, high margin, and low risk. And in the value ratio, we accounted for all of that already, and it's still 80% overvalue. If you compare standard and traditional ratio, it's way worse. I won't vomit. It's 88 price to sales. Honestly, I don't even buy 88 price to earnings company. So why? Who is buying at this price? If you know someone that is buying at this price, please share this video with them because it gets worse. While influencers pump up the price, insiders are selling like crazy. Look, all red, no one is buying. Oh no, wait, some green here? Yeah, I guess it's worth $445. They're just dumping and dumping on retail investor. 220 million sold by the CEO Alexander Karp. Now, would you expect him to sell so much if the company would really be undervalued? Absolutely not. So, if you hold Palantir, you could sell the hype, make a lot of money, and switch to a true value company. Or you can play the ultra long game. For example, Amazon in the dot-com bubble dropped 95%, but today it's up like 4,000-5,000% compared to the bubble top. So if you think Palantir is the next Amazon and you're ready to wait 20-25 years, fine, it's your call, I respect that, just be aware of the risk. Personally, I can't handle this kind of absurd valuation, and it kind of makes me sad to think how much people will lose buying at these prices. Anyway, I would rather bet on undervalued companies like Celsius. If I'm wrong, at least I'm not paying 88 times revenue. Right now, Celsius is selling at 2021 prices with 4 times more revenue. Yet, last week it fell 10% more, while Palantir was up 40%. Maybe this Palantir sickness is actually just envy. If you want to see why I'm bullish on Celsius, check out this video. I will explain exactly why it's a better deal. Enough for today. Peace out.